Welcome to the link this evening, this week. And we continue in our series to help you make money, make decisions that help you to make money, or make decisions that make you avoid decisions that will make you lose money. Tonight we're discussing government bonds. Government is the best, so to speak, person, if you like, who pays. And one of the instruments they use to borrow money from the public through commercial banks are called treasury bonds. In other words, if you buy a treasury bond, you are lending to government. And government can be a good person to lend. Tonight we have Mr. Robert Nyengane. Robert, I hope I got your name right. Who is the head of Treasury Housing Finance Bank. Robert, you're welcome.
Thank you.
Let's go straight away. If I want to buy a bond from Bank of Uganda, I have to come to you. You're one of the 7 banks I should come to. Tell me, there's this thing called the secondary market which I should come to you. What is this secondary market and how does it work?
All right, thank you. I would do the question injustice if I do not talk about the primary market. So the primary market is basically a marketplace where the debt instruments sold by the government through Bank of Uganda are sold. So in the primary market, investors buy the debt instruments, which are bonds, from the issuer of that instrument, which is a government bond. Now, the secondary market is the marketplace where you buy this security from a third party, being that investor or that bank that bought the security from the issuer in the primary market. So that's the definition of a secondary market.
So in other words, Housing Finance Bank is a third party.
No. Housing Finance Bank is a primary dealer. Oh yes, actually, Housing Finance Bank is a third party in this case that will have bought the government security from Bank of Uganda in the primary market. So Housing Finance Bank is a primary dealer, and in this case, it would be able to sell to the public and to the rest of the investors the government security as a third party.
Okay, we are dealing with the secondary market, which includes us, the ordinary guys, while you, the banks, are the primary dealers. So if I'm coming to housing finance, who can come? Who can participate in buying bonds from you?
Anybody can buy, any individual can buy a security from Housing Finance Bank, which is a bond bought from Bank of Uganda. And that ranges from individuals who have saved up money, investment clubs, SMEs, large corporates, even if it's an NGO, for as long as you have saved up money and you want to invest in a security that yields you high value, you are eligible for as long as you have a minimum of 100,000 shillings.
Yeah.
You're eligible to buy government security.
Yeah, I was about to ask, what are the parameters? You need the national ID. What do you need from me in order to buy from you? Is it automatic?
First thing is that you have to open an account with Housing Finance Bank. And that could be a savings account, it could be a current account. So we shall do the necessary KYC. If it's an individual, the KYC differs from an SME or any other entity. So once that KYC is done, then we have you as a customer in the bank. And after that, we facilitate the process of opening what we call a CSD account. Now, a CSD account is an account that is held with the central bank as the issuer of that security. And it's on this account that you actually hold your government security as an individual. So we facilitate you in that process of opening that CSD account, which takes a very short time. So once you have opened the bank account with Housing Finance Bank, the rest is history. We facilitate the process and you're ready to invest.
Okay, what are the available options if I'm talking about bonds? Somebody's listening and say, okay, bonds, when I go, what are the options? Like you have other instruments, other things you sell, but as bonds, what are the options for me if I want to buy?
Within the bond category, you have what differs is the tenor. So you can choose to invest for 2 years, you can choose to invest for 3 years, up to 15 years. Now, the benefit of that is that even if you invest in a very long-term bond, which is 15 years, you get coupon payments every 6 months. The yields are good. The security is risk-free because think about it, you're lending to the government of Uganda. So while you sit back and not worry about risk on your investment for say 15 years, you also have cash flows every 6 months. So you're paid a coupon payment every 6 years, which is more or less, in a layman's term, interest on that investment.
Yeah, I was going to ask you what the coupon is, but it's interest. You are paid every 6 months on on that investment until the day it expires and you get back your initial money.
Until it matures. However, you can also choose to sell the security because it's a liquid instrument in the sense that you can realize cash out of it. So if you've invested it for 10 years or 15 years, and down the road, after 5 years, you need the liquidity, you still come to Housing Finance Bank and we buy it back from you and return the liquidity to you. So you could actually make a profit or a gain out of selling it before it matures, depending on where the interest rates have moved. So interest rates could move against you or they could move in your favor. So you can choose to hold it to maturity or sell it before it matures if you need the liquidity.
Okay, Robert, I want to understand that you as the bank, you buy the bond from the Bank of Uganda at a certain price. And then I come to you now as another party, another layer to buy at a secondary level. How do those prices relate? The price you buy from the bank and the price you are going to give me when I buy it through you. Is it the same interest rate?
What happens is that in the secondary market, what we shall do as Housing Finance Bank is to be as competitive as we can, because for us it's not that we're looking for big profit margins. So of course in a marketplace you expect the forces of demand and supply to apply, but you will find that in the pricing that we shall offer the market, we shall be the most competitive bank, because what we're looking towards is actually deepening the market and giving the opportunity to every eligible person out there to buy a security and feel that they have a safe and secure investment. So pricing will be very competitive. It will be well within reach of all eligible investors with no wide profit margins. So I must say that there's a margin that primary dealers will add on top of the cost of that security. But the important thing is that we shouldn't be running after making a lot of money at the cost of investors. So yes, there's a small margin to cater for any operating costs of the bank, but it will be well within range of the primary market.
Okay, Robert, finally, what's the advantage of this money-making option compared to others? And we're considering investment in these days of COVID. When I put money there, what's the edge of this option over others?
The edge of this option over others is in twofold. One, like I said earlier, is that if you're looking for a risk-free asset, this is one of the investments that you should put your money in. Why? Because you're lending to government. Government is by far the best borrower in any economy, in the sense that governments will always pay you back. So as opposed to having your money and investing it in a business or lending it to your family and friends and you never get it back, this is an investment that doesn't need you to monitor it every day, see how it's doing, because you invest and it makes money for you while you're sleeping. That is one. So it is a risk-free asset. The other is that the yields are really good. So you've made your savings, you have money, you put money aside. This is an investment that is going to give you very good yields. And by yield, I mean in terms of the interest you earn on the investment. Those are the two major benefits to any investor.
Thank you so much, Robert, for educating us on the option of investing in government bonds. And Housing Bank is one of 7 banks which are allowed to do what you have just described. But Housing Finance being a partner, I guess you had first option in educating financial literacy, so to speak, for our viewer. Thank you so much, Robert.
Thank you for having me.
Viewers, you've heard about the option. You have some money, you're wondering where to put it. You want to speculate, don't speculate. You can buy bonds, you can go to Housing Finance or other 6 banks where you can invest in government bonds, that is lending to government. And this one is 99% risk-free, they say. That was the link. Thank you for joining us tonight.